Hello and welcome to TA for Traders. I'm Nigel Croft and it's Wednesday the 26th of April. In this video we'll be looking at the chart on the EURUSD Forex cross, so the euro. And what we'll be seeing is that the euro's had a good rally this week after the first round of the French presidential election, but it's now up to resistance and maybe a consolidation should be expected. Here we have the daily on the euro, and you can see that this week has been very strong, with this big candle here being the Monday after the French presidential election. That's taken us above the downtrending 200-day moving average, which is a good sign. Also good that we did track down with the 50-day through the last 2-3 weeks. We've now pushed up through there, and the 50-day moving average is now moving up. So on this chart you can see straight away, without much guidance, we're getting a pattern of higher lows going up there, and we're also getting a good pattern of where we've now had 3 higher highs. So we are in an uptrend, and that is positive. Also on this daily chart you can see the RSI is in an uptrend, indicative of upside momentum, and the MACD have diverged, short term above the long term, again indicative of positive momentum. So it all looks good from the daily perspective. However, if you then change and look at a longer term perspective, here we've got the weekly. So each candle represents 1 week. You can obviously see that we've had 3 good weeks, but we're right up against this downtrending 50-week moving average. And we can see that we have gone above it this week, but we've now come back to right to this level, and it is acting as resistance. You can also see that we had this triangulation formation which came to a head in October. There's a lot of resistance points around here. That's at 112.67, another one here 111.11, 114.63. These are all key resistance levels from this period of range trading, and you'd expect it to take time to be able to break through there. So the immediate resistance on this short-term chart is at that 50-week downtrending moving average. On the shorter term picture, here we have the 4-hour. So each candle represents 4 hours, and you can see that we're extended away from the 20 and the 50 and even the 200 4-hour moving average. It's all positive that they're moving up. However, we are overextended, and we've also just had a breakdown in the RSI, which has broken from around the 80 level and is now trading at 63.41. The peak on it on there was lower than the peak that we had from the previous peak, all on the same day of course, but these are 4 hours. So that's a slight warning sign, as is the rollover in the MACD. So overall, warning signs coming from the short term, overextended, we were overbought, that's unwinding, MACD unwinding. On the weekly picture we've got resistance on the upside, and we're at key resistance level now. However, do remember that the daily did look reasonably positive. If we could pull back towards the 200-day moving average, that would be great, and let's see what happens then. And we are in an uptrend as long as we continue this pattern of lower lows and higher highs. So let's have a pullback towards the 200-day, and then see if the next push up takes us to a new high to continue the trend, or do we get confirmation the trend has broken, and then we push and then start to test the supports around the 107, 106 level. Looking at the support resistances, support at the 200-day 108.50 106.415, then at the 20-day 106.917, with the resistance at 111.318, 111.942. So this has been TA for traders, looking at the Euro USD Forex cross. I hope you found the video of interest. Thanks for watching right through to the end. Please do remember that the video and the charts are my opinions only. They're not meant as investment recommendations, and it's for educational purposes. Please do read the disclaimer. Thank you.